Alright, welcome back again to another part analysis on Euro USDC. So in this video I want to share with you what I will be looking at for this week and something that we need to pay close attention to. So without wasting much of our time, I will go straight to the analysis process. So now I just want to kick off. There's something I really want to point out, so I'll kick off the analysis from the weekly time frame. So what we have here is we have a bullish structure here. Now this is a swing low. We have a bullish push to the up. Now we have a pullback. This is high, low. We had a break of structure. Now looking from the weekly time frame, if you can observe clearly from the weekly, we have a wick. Now most of the time we don't regard a wick break as a valid break, but now remember that we're on a high time frame. So what we are going to do here, we are simply to put this into consideration. Now we had a break of structure to the upside. What do we anticipate after a break of structure? What we expect is we expect a pullback. Now we don't, once the low that leads to the break of structure is a strong low, so we don't expect price to drop below it. So what we expect is once price make a significant retracement, we expect a push to break of structure to continue the bullish move. Now if you clearly observe, I've done some markup here, but regardless of that, if you can clearly observe, what we have here is we had a base here. Once we have this pullback, we had a base from here and price push. Now what we have here, we have a sequence of weekly bullish push to the upside. What do we anticipate? We anticipate this push to cause a break of structure. Now this is very important. I want you to listen carefully. Now we expect this to cause a break of this high, this weekly high, to signal a continuation of the bullish move. Are we together? We expect this to cause a break. Now once price came here, what happened here? Now this, from the look of things, this is sequence of bullish. This signal that there's a strong push. There's a strong bullish push to the upside, which leave level of imbalance. And once there's an imbalance in the market, this is what I'm thinking now. Once there's an imbalance in the market, there's a tendency that price will retrace and come and fill up the level. Now there are a lot of reasons why price can retrace back again. But what we can see here is once we have, after this sequence of bullish push, 1, 2, 3, we have some level of consolidation. That 1, 2, 3, we have a 3 days or close to a month of period of consolidation, which giving us from the higher time frame. What we can see currently from the weekly, we have a weekly bearish push, a momentum candle to the downside, filling this imbalance. Now what are we going to do? Are we looking for opportunity to sell in this market, or we are still looking for opportunity to buy? That's the first thing we need to do. Now as I've said earlier, based on my previous video, the first thing you need to do in the market, regardless of what, no matter the condition of the market, the first thing you need to figure out is the direction that you are looking, your bias, where you are looking to place trade. What are you looking at? Are you looking for buy? There are basically two operations, as I've said earlier. They are basically to either buying or selling. So before you can think of if I'm buying or selling, you need to figure out the direction. It's direction that tell you which of the operation you are carrying at, or if you are buying or selling. So in this market, like you cannot really clearly pinpoint if this market is actually going for a buy or sell from this weekly structure, because we have a bullish push, we have a consolidation, we have a momentum candle to the downside. Now, so we cannot really tell if we are buying or selling. If we are to buy in a situation like this, safe, we cannot conclude from here. There's no any significant pattern to tell us that okay, this market is going for a buy. This is just a technical price came to fill some technical level. So there's no any significant price correction. So before we can conclude that okay, let's buy in this market, we need to see price correction from this level. Or if we want to conclude that this market is going to sell, we need to look for pinpoint our level of sell. We can't just jump into the trade and sell. We need to be able to pinpoint our which I will talk about later. So after your direction, the next thing you need to do, you need to have a defined trading entry. You have to have a defined entry model. So that's the second thing second part of when it comes to analysis you need to look at. But before that, we need to first of all focus on the directional aspect. Let's know what we are doing here before you like go and pinpoint your direction. So at least we have seen the structure of the market from the weekly time frame. Let's go to the daily time frame to see how the structure has built up. So let's closely examine this market from the weekly perspective. From the daily perspective. Now we're on the daily time frame. So I still want to use this opportunity to point out a structural level. Now what we have here is, now if market is to the upside, if market is bullish, it's creating sequence of break or structure to the upside. Higher high, higher low, higher high, higher low. What we have a high here. Now this is a break or structure. You can see this vertical bar. I think I'll do some markup here. We had a break or structure to the downside. What do we anticipate for? We anticipate a retracement, a pullback to a significant level. After that, we expect a correction of the retracement, like correction, reversal, push, which lead to a break or structure. Now looking at the daily time frame, I'm analyzing it. We had a break or structure to the upside. After that, what do we anticipate? We anticipate a retracement to a significant level. We don't really know what will lead, like will cause it to push back, but what we expect a retracement. These are past prices, so I'm just brush through it. So hold on. So we have here, we have a pullback, we had a break or structure. Once we had a break or structure, what do we anticipate? We anticipate a pullback. Now, one thing we don't really want in the market is creating sequence of break or structure to the upside. Now the reason why I'm pointing this thing is sometimes can be in a state of dilemma. We cannot pinpoint the exact direction or what are we going to do, the operation that we're going to carry out in the market. Now I want you to listen carefully. This is very important. Now listen, there are times you come to the market, you can clearly point out that this market is bullish altogether, or this market is bearish. So at that point, you know exactly what you are looking for. So the next thing you want to do is you dive straight to your entry model. The entry model comprises of where you should be looking to place your trade from, either pending order or you are looking for price correction at that point. That's it. But there's times you come to the market that you don't really see, you cannot clearly tell if the market is bullish or bearish altogether. Don't get me wrong here. What I mean is, if you cannot tell whether the market is bullish or bearish, you cannot really pinpoint if it is right for you to buy or sell. So in this situation, what are you going to do? That's the next thing. That's the question you need to answer yourself. Now what you do here is you go back to the previous trend of the market, how the market has been behaving previously. So you use the previous price action, the structure, to read the current trend. So what I'm doing here is, let's assume currently I don't really know what to do if I'm selling, or for instance, I don't really know what to do if I'm selling or I'm buying. So what I would do here is, what was the previous price action? What was the previous structure of the market? That's the next thing I need to figure out. So once I've been able to figure out the previous price action, what I want to do here is I want to use that knowledge to read the current market structure to be able to tell if I'm going to buy in this market or I'm going to sell. So what we have here currently here is, previously we had a structure that is building to the upside. Now we had our first break or structure at this level. So the next thing we expect a retracement to the downside, which we did. Now what you need to understand, once the market is building momentum to the upside, we don't expect it to cause a break or structure to the sorry, excuse me, hold on. We don't expect this structure. Once we have the break of structure, one thing we have a protected low, that the low which lead to the break of structure. Now we don't expect the retracement to lead to like break below the low that lead to the break of structure. That means it's a protected low and it's a strong low, so we want it to be protected. Are we together? Protected. Thank you. So next thing we expect is price can push back, price can come and make a double low and push up. Now without wasting much of our time here is, so what we have with us here is, hold on, let me adjust this thing properly so that we can clearly, I know that time is not by our side, but oh god damn it, what am I doing? Okay, thank you. So what we have here is we had a push to the downside. Once we had a push to the downside, what is the current move of the market? What we can clearly observe here, let me use, I don't know where you can get it. Now we had a push. What do we expect? We expect a break of this high. Now I'm using this trend, I'm using this vertical, like this line. What we anticipate is, we anticipate a break of this high to signal a continuation of the bullish push altogether. Previously the market is, as I've said earlier, you are going to think in context of the previous price action. How is it, how the market has been behaving previously, to know if the market is not behaving in that pattern. You can easily tell that, oh, this market is not behaving in the previous pattern. I say, if it's not behaving in that previous, there are basically two operations. If it's not behaving in that previous pattern, meaning it has changed. So if the previous action was buy, if something changed, what was in the opposite is selling. Okay, so this is what I'm, now you are confused on what direction the market is going currently. Now if you are confused on the action, you have only if you are confused on the exact direction the market is going currently, so how do you tell the exact direction is going? Now it's based, you can read it based on the previous price action. Now why did I say you can read it based on the previous price action? Because you can easily tell the direction is going, because there are basically two options you have in the market, either buy or sell. Now previously the market has been buying, so if the market fail to do that, meaning it's doing the opposite. What is the opposite? It's selling. I hope we are together in this video. So what we have here is, what I anticipate, what we expect is to cause a break or structure to the upside, signaling a bullish price action. Now what we have now, so our major focus here, hold on, our major focus here is to expect the market to go cause a break or structure. So now we are done with the previous price action. All right, so our focus here is now is we're expecting the market previously, like we have not proceed to the current state. Now previously, what are we expecting? Our previous mindset, our previous build up, our previous knowledge was expecting the market to cause a break or structure, signaling a continuation of the market. If the market fail to do that, meaning it's giving us the opposite behavior. So which the opposite behavior is selling, but cannot conclude yet. Let's see if it's doing according to what we predicted. If it's not doing that, we can think otherwise. So let's proceed. So now currently our focus here, this is the level it's got to. Once it retraces, we had a push, a pullback. Now the first break or structure to the upside, if the market is trying to do that, is a shift in market structure. We had a shift in market structure here. Price push up. We had a, which is really not significant, but we had a drop. What we have here is, let me remove this vertical line. So what we have here, we're expecting a continuous push to the upside. We have this bullish push, a drop down again to a level of demand. This is a signal that there's a momentum in this push. Now we had a push. There's no like, this is a signal that the bull are really in control. So we had a push, a bullish push to the upside. We have a minor bearish push again. This is a signal that the buyers are not strong in the market. Now, so what do we expect? Now, from this price action, we are seeing a break or structure. Price is breaking to the upside. This is signaling that we are on a bullish move. So our major focus, our focus here is on this leg, on this trend. I hope we are together. Our focus here is on this our focus is on this. Our focus is on this trend. We had a break or structure to the upside. So what do we expect? Once we had a break or structure, the origin that lead to the break or structure is this. This was the origin. This is the origin that lead to the break or structure. So meaning it's a protected low. And what we don't expect price to, once price retreats, we don't expect it to cause a break of this low. We expect a continuation of the bullish push to the upside. So within this impulsive bullish mode, we anticipate we have to look for, this is where our entry model come into play. Now once it push up, this was the high, this was the highest level we got to. So we have a trading range from here to here. So what do we anticipate? We anticipate a price to push down to a significant level of demand and push up to signal a continuation of the bullish push. So we had a break or structure here. We have a trading range. Now after this, the next thing we want to do here is to push down to the lower time frame. So at this point, next thing I want to be looking at, I want to dive into is the entry model, because once we have been able to figure out the direction that we are buying, the next thing is to pinpoint the level where we should be looking to take trade. I hope we are together in this market. So we have a low, we have a high, we have defined our trading range. What is the next thing we expect? We expect a retracement to a basic level and push up. So let's go to the lower time frame. So what we are going to do here is, hold on, what is going on now? What we expect from the market is, now I've marked my daily trading. I believe that video, I think I've made video on how to map trading range. Now once we have our trading range here, now we scale down to the we have scaled down to the 4-hour time frame. Now we are following the rules of the market. The rule said buy when the price is low. So it's up to you to define where your low is in the market. That is where your entry model come into play. Altogether, so there are several technical tools, as I've said earlier before. There are several tools used to pinpoint your low in the market. So how do you define low? Now, from my own style of trading is this. I use supply and demand as my entry model. Very important. So my supply and demand model is level where there's an aggressive push of the market, where buyer. Now since the market is bullish, what I'm focused on, supply and I use supply and demand. So these two concepts, the one that you're going to use is being defined by the structure of the market. If it's bullish, I'm looking for opportunity to buy, so I should be buying from level of demand. If it's bearish, so I'm looking for opportunities to sell. Where should I be selling? For the level of supply. So at this point the market is bullish. So what should I be looking for? I should be looking for opportunity to buy. So where should I be buying for? I should be buying for my level of demand. So where are my level of demand? So my level of demand here is where I called my low. Are we together? Those are the level I called low in the market. So currently from our trading range, I'm going to pinpoint my level of demand. Altogether. Now your entry model define a level you should be looking to take trade. Since I can have more than one entry point in the market in my range, so it's left for me to figure out which of them is more effective or where I should be looking to take trade from. So without wasting much of our time, let's see. So here I said a level before there's an aggressive push. Now I have here, closely observe, I have here 1, I have here 2. Hold on, I'm going to show you something. I'm going to show evidence. Now from the look of things, now I have 2 levels to take trade from. Now the rule is we expect the market to retrace. Once it retraces, my own style is I buy from level of demand. Since I'm buying, it's a buying market, I buy from level of demand. I have 1, 2. Now sometimes if you ask, okay, progress, how do you buy here? Sometimes you look for, this is where you look for confirmation. Here will come to confirm. You either use aggressive entry or confirmation entry. Are we together? So what I did here is, sometimes there are a lot of things you need to put into criteria in the market when it comes to the market. So at this point, I'm not going to say I'm still in the edge of learning. The market is continuous learning. So this is a significant level which I map out, but I did not take trade from it. Why? Because I was scared, or maybe probably it's not enough. I look this level as level of inducement, zone that persuade people. So at that point of analysis, where I anticipate to enter trade is here, this level. So what I did here, I place a pending order here. I leave this level, especially that if price come, it will react to this level, inducing people like, oh, this market is going to buy, push up. So what I see, this push here was like inducement. So what I expect, the next coming, after this reaction, the next coming is supposed to break this level. Well, fortunately, price rallied to the upside, giving a significant push. But see it on that, market came, break this low, come back, tap into the second level again, push up again. So this is not capping. Let me show you my history. So what you see here, okay, you see other trade I even took, so I even make profit, but I close out on time. So once, okay, I lost one trade here too, but initially I did not place trade here, I don't put any pending order. But market came, tap into the zone, react, push, come, make a significant push to the upside, which I placed, I would have make money. But now it can have several levels. You can only place trade one that you are comfortable with. So the next thing I did here is, once price make this push to the upside, I had another level of demand. Now would not really necessarily, once the push, it not necessarily make a significant break or structure to the upside to create another structure. But what I observed here was we had a level of demand here, this level of demand, which was significant to me at that time. So what I did was I placed a trade which I had not lost. I placed a trade at this point. Once price tapping, push up, as it was coming back, I not close my trade on time, so I just close it. So this is by the roadside. What I'm major focus on was this level. So when I already put my pending order here, once price came, you can see the tap. Price tapped me in before it pushed up again. So I made about $200 something in this. It's up to 200. Okay, it's up to like 200, but I closed that at $160 something. it was more than 200 self. So but I closed that at 1 something. So let's see. So how did I narrow, how did I be able to pinpoint? It's already mapped out here and I don't need to stretch itself. So after all this, now what am I currently looking at the market? What am I expecting to do, or what are we looking at for? What are we going to do? That is the reason why we are making this video. Now we've been able to use the previous price action to sketch how the market is behaving. So currently now, what are we looking for? All these are past price action. What is the next operation we are going to carry out in the market? What are we going to look at for? What are we looking for? What is the current direction of the market? So currently now, without wasting much of our time, let me talk of these few things. Now we still have our low is still protected. That's it. Our low is still protected. Now what we can see is the level we're expecting the market to push up. Now what we expect this level to make a continuous push to the upside. Once price tap into this level, what do we expect? We expect the market to reverse from here and go and break structure to the upside. But failingly, the market failed to. Market tap into this level. What do we expect? We expect a push, which it did. A push give us some profit, but it came back again, break this level, violating our rule. Now what do we expect? We expect the market to keep on pushing to the upside from this level, but it did the opposite. Now it came and break below this low. Now this low where our entry point. Now our entry point is not the origin, it's not the trading range level, it's not the lowest point. So the market is still within the trading range. So what I'm going to do here is we are not still going to buy. We are not going to buy because there's no any significant buying point here. All together, the level we are expected to buy is here. So but it has gone below our level of entry. All together, so there's no any buying point here, or neither there's no any buying point here, or there's no any signal that is telling us to buy. So what we should be doing here at this point here is nothing. From the buying aspect, we are not buying this market, but we can still define that the market is still bullish. Don't get me wrong here, listen. Why? Because the reason why I said it's still bullish, because we are still within the range of we are still within our range, even though we have some push that is giving us, I don't want to be too forward, even though we are still giving us some structure that is pointing to the downside, but we can still tell that we are still on the range that define a bullish structure. So what we are going to do here, since we don't have any level of buying, we are not going to buy. So at this market, we can conclude that there's no buying option. Buying is what? Cancelled. Now before we can buy, before we can buy, now buying still come again. The market, you have to be think twice. If before we can buy in this market, we need to see a significant price correction. Now where should we see the significant price? We need to see it above this our range. If we do not see it above our range, we need to see it, need to be clear, and price need to push, give us a significant correction and push to the upside. Give us a significant price correction. Now there's no any level again. Now we need, since there's no level, what we expect now? We expect price to create a correction pattern. I'm getting. Now there's no level again. Now we use supply and demand to buy. Once price, there's no level of demand again, we are not doing any operation again. Now the market can still create other pattern that would signal us that market is going to buy. Once the market is, that signal us that the market is bullish. Once it signal us that the market is bullish, is then we go back again to look for our level of demand to buy. Again, first of all, the market need to give us that pattern. Once they give us that pattern, we'll go back again, go and look. Now that pattern will not tell us to buy, but that pattern is it will tell us to buy, but it should not give us the point as to which we are going to buy from. Now this market is telling us to buy, but it will not give us the point which we are going to buy from. So the level of demand is what defines our point we should be buying from. So what we expect from this market, before we can buy, we need that pattern. Once that pattern tells us that, oh, this market is going for a buy, is then we go back again. So where should we then go back and ask ourselves, where or at what point should we be looking for opportunity to buy? I hope we are together. So now currently we are not seeing anything. There is nothing in the market that is telling us to buy. So we are going to share and wait. Now the other way around again, from the way the market is building down, you can see that it's creating high, low, high, low, which is bearish structure within the range. And this is a significant bearish structure. Now once we have a significant bearish, what we want to do is, first of all, higher time frame sum the price action, lower time frame tell you what is currently happening. Like lower time is the lower time frame and beat up the higher time frame. So what I'm saying in essence is the higher time frame give us awareness of is foretell the higher time frame, but the higher time frame control it. Once it's the lower time frame that build up to create the higher time frame. So before anything showcase or become obvious in the market, the lower time frame have already defined it. Now regardless we are on a bullish range, the market can still signal tell us on time that this market, I'm done with your bullish move, I'm coming for a bearish reversal. So we need to put that perspective into consideration. We need to put that mindset. Now since it's giving us this bearish vibe, we are still going to put it into consideration. Now why did I say is giving us a bearish vibe? Now this is our trading range, right? Now we have multiple range. As I mapped earlier, we have multiple range. We have this range here which is our bullish. Now what will the price react from this level? And once price react from this, there's no any defined level that price is going to react. Once price we have this level, what do we anticipate? We anticipate the price to cause a break of this structure to the upside. Now altogether, we expect this to cause a break or structure to the upside, but what happened here is it failed to cause a break or structure. That signal a weakness on the bullish move, or probably it's not ready to react from this level. It's coming to this level to react. But when they came to this level, what do we expect? Okay, yeah, this level go and break this, but see it the same failure. What is that telling us? That is telling us that the bull are losing control of the market. We are still on the bullish range, but this is like early signal. Now we don't know. Now this is signal. What I said earlier, if I say signal tell you what you should be doing on the market, but it not tell you the point you should be looking to do what you want to do in the market. Don't get me wrong, I hope we are together. Now this signal is telling us that the bull are losing momentum in the market. If the bull are losing momentum, if the bull are losing momentum, who is in control now? The bear has taken over. Seems like the bear is pushing in, but we are still in the range. That's why we are still skeptic. So if from at this point, if we can conclude, okay, this is from the look of things, if this is a failure, a weakness in the bull, we had a shift in market structure. First of all, we had a break failure. This is a weak low because he failed to take. Now we'll break below the weak low, which most of the times some foreign educators will call it a shift in market structure. Others will not regard this as shift in market structure because it's a weak low. This is a strong low. We expect a break of a strong low to regard a shift in market structure. But this is a signal. Signal is significant information in the market. So Now we had a break or structure. Now why we not consider this as a significant point? Because this is another level we expect the market to push up, but this level also the same thing fail to even cause a break of this swing point of this reaction from this level, demand level, the weak low demand. So we can see that there's a weakness in the price. We have a low, a lower high, a lower low, a lower high, failure to take away this low. So this is a signal that the market is coming for a bearish push. Now once, like from the wrap of things, you can know that okay, since this market is coming for a bearish move, if we want to, okay, let's align our style to the bearish move. Now at what point, this is where supply coming to play. Now the market is selling. Once it's selling, we look for opportunity to sell. At what point are we going to sell from? I hope we are together. At what level are we going to take the sell trade from? Where are we going to sell from? That's the next thing to put into consideration. Where, at what point, at what level are we going to sell from? That's the next thing we want to do in this market. So as I've said earlier before, once you be able to figure out the direction, the next thing you want to look for opportunity to sell. So where are we going to sell from? There's no need to do more emphasis again. We map out our level of demand supply. So at this point we are saying, so we map out our level of supply. So what I can see currently here is one level. We have this. This is the supply level. So you can see this is the most obvious supply level. So what do we anticipate? We anticipate, since the market is bearish, from the look of things, we expect this market to, if we want to sell, we expect the market to push up to this level. Now why did I say we want to sell? Because the market is not giving us any bullish push, like clear bullish move, clear bullish correction to buy. So the only signal that is giving us is selling. So selling, you cannot just randomly sell. What level are we going to sell from? This is the level, the map at. So what we go here, you can go to the 3 hour to confirm. So the origin is still clear there. What we do again, we can go to 2 hour. So this is the only point we are seeing currently in the market. So what we're expecting next week, the operation is not really clear yet. So we are still going to wait to see how the market is going to play out. So we're just giving time to build up. So first of all, we need to currently, from conclusion, to wrap things up, we are not looking for any buying opportunity yet, because there's no any defined buying point. Now if we are to sell, the only defined selling point is this level, which I've mapped at. So the market, one thing is to do analysis. You can never control the market. So we are going to wait for the opening of the week to use the current, how the market play out, to align with our analysis of the week. So let's be patient and want to keep ourselves disciplined. So that's the most important thing I have to share in this video. I think time has already gone, the background is already dark. So without wasting much of our time, this is what I have to share with you. Let's keep the energy up and keep analyzing and see how the market play out. Thank you and peace out.